Hello, guys. Um, so tomorrow is the budget day. Around 10 o'clock or 11 o'clock or so, we would be seeing the finance minister uh, come on air and announce the budget for the year 2023-2024. This is a particularly important budget because this is also the last budget of this current central government. After this, 2024, there are going to be general elections and then it's a new government. It could be the same parties, it could be the same portfolio, politburo, whatever, but it is going to be after a new round of elections. So, this is a very crucial budget announcement that we are expecting tomorrow. Also, as we have seen in the last few days, we have seen a very heavy consolidation on Nifty and Bank Nifty, the indices. So, I'll tell you how to trade the budget day tomorrow. Now, this is going to be the exact same plan that even I will be following tomorrow. There is a standard plan. There is a standard plan that I'll backtest and show to you, and then there is a very small modification to improve the results. Okay, so I'm guessing ATM, OTM, ITM. Everyone knows these three things: at the money, in the money, and out of the money. All right. So I'll take you to this screen. It's called StockMock. You basically use this platform to create strategies and backtest standard rule-based setups. Now here, I will just be testing for budget days, and what we'll be looking at is a short strangle. I'll tell you what a strangle is. Strangle is basically when you, a short strangle is basically when you sell an out of the money call and an out of the money put. A long strangle is when you buy an out of the money call and an out of the money put. We are trading in short strangle now. Now, there are a few adjustments that you need to make here, and you need to remember these points very clearly. Your SL for each leg. Firstly, the strikes that you will be entering will be 200 points away from wherever the market is at 920. You need to open this triangle at 920 and you will be opening uh, the strikes, or you'll be choosing the strikes 200 points away from wherever the market is standing at that point. So basically, you'll be waiting for one 5 minute candle to be formed entirely. And whatever be the case, I need you to exit this position at 3 o'clock max and try to hold it till 3 o'clock. All right. Now, the SL for each of those legs, we usually in an intraday position, we keep an SL of around 20%. But since tomorrow is a special day, we are expecting a sudden spike and settlement of volatility and VIX. So we have to be prepared for a bigger stop loss just so that you don't get blown out of your position prematurely. All right. So you have to hold a 50% SL on both legs. I am clicking on this option of move SL to cost, which basically just means that if your call gets exited, your put stop loss is moved to your entry price of your put leg. You understand? So that in the worst case, in the absolute worst case, you can incur loss on only one leg. All right. Okay. You are going to be trading in BN, which is Bank Nifty, and you are going to trade in the weekly expiries. Okay. And that's the strategy for now. I'll just go down here and click on start backtest. Let's look at the results. All right. Okay. Now this is what I need you to understand. This is 100% strategy in the last 7 years. In the last 7 years, over the last 7 budget days, it has hit zero losses and it has only hit profits. Now the average day profit is around 2.36% of whatever the entry price is at, and 13,750 per one lot each is what you have earned at maximum. Now we see some better breakdowns if you just go down here. So you see 2017, 2018, 2019, 2021, 22 till 2022, you have never hit a single loss. Now this is the exact strategy that I am going to be following tomorrow. Now there is one thing that I need you to observe here. On 2 days out of those 7 days, none of your stop losses were hit. Your stop losses were not hit on 2 days, but on 5 days, one of your legs did hit the stop loss. and the other one still broke even and way above that. It took you into profits nevertheless. Now 50% stop loss is a big number. It's a huge number. So it's pretty far away that you're looking at. Okay. Now the one modification that I'm going to be using personally tomorrow, I can advise you people to do it too. Uh, if your put gets stopped out into a loss, if your SL is hit on your put leg and your call leg survives, remember you have sold the call. You have sold the call, which means, and your put stop loss is hit, which means your put premiums have increased, which means the market has gone down, right? So for an option seller, a call selling is equal to an option buyer buying a put. Now, if your put SL is hit, your call survives at cost to cost because your stop loss for the call leg is at cost here. At that exact moment, when your put SL is hit, I need you to buy a put. You have to buy one put. Now, which put will you be buying? You will be buying an at the money put for whenever your put sell leg stop loss is hit. Again, wherever you are, when your put stop loss is hit, I need you to buy a put and hold it till 3 o'clock again with the same call leg. And if your call stop loss is hit, you have to buy a call. You have to buy a call and carry it with your put sell leg till 3 o'clock again. And your stop loss is just going to be on the sell leg, on the cost, on the remaining leg, on the cost. Simple. It's a very simple strategy, and this is the exact same thing I'm going to be doing tomorrow. I hope you don't miss the chance to trade tomorrow, and do be very careful about where the markets might be moving. But this is my trading plan for tomorrow. Personally, in my experience, as much as I have backtested this, you have a maximum loss of around 2 to 5,000, not more than that. And again, I am speaking on the basis of the last 7 years. It could change a bit tomorrow. I mean, the markets are always unpredictable, but this is the plan that I'm going to be following tomorrow. Thank you so much, and all the best.